There was a book I read a long time ago. It's called The Leadership Pipeline, and it helped me. It has wildly helped me, actually. I was homeless at the time that I read it, and it helped me understand a lot about business and the way that business works. Starting at the bottom of a company and moving up to CEO was kind of the format of the book, but it applies to non-employee types as well. It squarely applies to business owners, and it taught me two key things. One is that the hardest transition is going from doing something to managing people. Like, managing people is super tough. And it talks about the change in your mind that you need to have when you do that. But it also talks about the next big, most difficult transition people tend to make is from managing something that's familiar, like sales or like human resources, to becoming a manager over all different types of business, like sales, accounting, human resources, operations. There's a part of business for me that has always been back burner, which is accounting, right? I've never been an accounting guy. I don't feel like I'm strong in it, and I really don't care. It's just, can I manage my cash, right? If I can operationally manage my cash and not run out, that's the most important thing. I had a professor when I was younger. I was homeless and I snuck into his course on entrepreneurship. He did a semester on cash, and he's like, rule number one, don't run out of cash. Never run out of cash. And that was like his only main real rule. He's like, you follow that rule, you'll survive in business. So years later now, there's something I need to talk to you about. I keep using the phrase cash flow. I just did a video about how I cash flow millions of dollars a year. And then one of you in the comments, let me show you, said, hey Sean, do you mean cash flow? Like, do you mean it the way that it's supposed to be meant? Or do you mean like revenues? Because this is and can be misleading. So in this video, I want to come clean on something. I'm going to talk to you about the difference between cash flow and revenue. I'm going to teach you a little bit about basic accounting, so that way you can better understand how to interpret what people tell you, and you can look for the BS in there. And this also help you run your businesses, as an Airbnb operator or small business owner. This stuff's going to be super helpful. So let's cut in. Let's teach you about some accounting principles and some jargon, and make you better at running your business. All right, welcome back, Airbnb family. Thanks for tuning in. Love you all. Let me remind you, like the video. It's super helpful for engagement and performance on the video. And let's just turn this into a conversation. I'm sure there's plenty of you guys and girls out there who are good at accounting, way better than me. And a lot of you are probably homeowners, right? So you've been doing comps and you've been doing cap rates and looking at stuff like that, ROI and good stuff. And so let's kind of like help everybody understand these financial principles. I'm going to give you what I can, and hopefully you guys can go down to the comments and read along, and there's going to be other people who are way better at this than me, who can kind of build off of what I'm about to give you. All right, let me be the platform, and you experts, I want you to build on it. So the first thing that needs to be understood is there's two main types of accounting practices. Companies can run on a cash-based accounting system, or they can run on an accrual-based accounting system. Cash essentially is where once a dollar comes into your bank account, or once you spend a dollar, then you track it, right? On your incomes and stuff like that. Be like, okay, so I made $100,000 because it got deposited in my bank. Now, there is an accrual-based accounting system that allows you to track incomes and expenses before you see the money, right? So let's say you make a sale. Like last month, December 2019, I sell you a car for $20,000. I can count that as accrued earnings, and you pay me into 2020, but it's still one of my 2019 taxes, for example. That's accrued. So accounts payable, just the same, right? Well, I have a bill coming up. I can accrue that expense, right? So I've got an invoice for supplies that I bought, stuff like that. So cash and accrual is basically how you time your incomes and your expenses. So now, this is where I made a huge mistake. Let's just talk about where I suck, okay? I've been using the phrase cash flow, and the way that I thought that cash flow was described was the difference between cash and accrual, right? There's something called revenues, and revenues is just all the money that you make from sales. So I thought the difference between cash flow and revenues was the fact that you can accrue revenue but not yet get it in your bank, and that cash flow is everything that went in your bank account, right? That's what I thought cash flow was. And I was wrong. Of course I was wrong, right? So first off, let me tell you that I've been incorrectly using the phrase cash flow, because I've been thinking of it as cash-based accounting revenues is kind of what you would call the way that I've described cash flow. It is the cash that hit my bank accounts, my deposits. And so that's wrong. So what is cash flow? Well, cash flow is tracked after your net income. So, and it is more than your net income. So let's say you have a sale. I would normally say, let's say you cash flow $5,000 on an apartment. That's wrong. Let's say you have $5,000 in deposits from Airbnb, from an apartment. Your rent's $2,200. Your housekeeping costs are like $400, and your utilities are $200, and your extra supplies and stuff are like $100 and stuff like that. So that's $2,900 in costs. Some of that is cost of sale, operating cost, etc. And so now you have $2,100 in net cash that came in from that after the cost of sale. So your cash flow statement, which is like a type of financial tracking, you have income statements, you've got balance sheets, you've got cash flow statements. There's all sorts of like P&L. There's all sorts of different stuff we're not going to cover on this video. But for those of you who are really good at accounting, like this is now your opportunity. Like put it in the comments if you want to teach people what a P&L is or what a balance sheet is, or the difference between a balance sheet and an income statement, because these things need to be known too. We can cover it in the future, but for now, experts in the comments. So your cash flow statement starts with your net income, right? Like essentially that whole 5,000 minus 2,900. But then you can have cash flow that comes in from investment activities and operations activities and different stuff that has nothing to do with your sales and marketing. So I'm going to leave a link to an Investopedia article that kind of gives a great example of this. They're looking at Apple, and Apple like revenue to 197 million, I think, 197 billion in this example, but net income was 41 billion. Then they started the cash flow statement, and then it ended up at like $51 billion, cash. So now the question though is, even though I was wrong, right, about cash flow, though I was using the phrase incorrectly, it's revenues, cash accounting based revenues. Do I still cash flow millions of dollars a year is the question. And so this is kind of fun. So I have people who are kind of like looking up my financial skirt per se right now because they want to see what's going on in my business. And they want real raw numbers so they know whether or not to invest in a business like mine. This came around because a company is seeking finance right now. There's a company in Austin called The Guild, and they've got about 160 properties, and they're trying to raise $25 million right now, and they want to be valued at $160 million is what they would like to be valued at. Pre-money, right? Pre-money, just so you know, is I am worth $160 million before you give me $25 million. That's what pre-money is. Post-money would be I am worth $160 million after you give me $25 million. That really greatly affects how much that $25 million is worth. Like what percentage of that $160 million is your $25 million worth, right? So that is a part of venture capital that I'm studying right now. So there's somebody who's involved in the VC game, venture capital game, that is looking into these businesses and trying to decide who to invest in and how much and whether or not it's a good deal. And so he gets the numbers for this company and he's looking at them and he wants my opinion and he wants to take a look at my numbers. And he realizes that my numbers are like, not to toot my own horn, but my numbers are so much better. Sonder, for one, is losing money. Just if any of you know who Sonder is, they're the biggest player in the game. They've taken in like $400 million in finance, like in debt, in equity, I think mostly. They might have some debt that they've raised, but mostly equity. And they're valued at 1.1 billion, but their burn, like how much money they're burning every month is huge because they have a bunch of engineers on payroll and stuff like that, which is stupid in my opinion. We're a hotel essentially. We're not a tech business, but they're trying to come up with this tech play and they think that they're going to do something cool later, but they're burning a ton of cash on the way. So they're not profitable. And there's a few big companies that are just not profitable. So the Guild, they showed their numbers and their operating margins are like 16%. So basically, for every dollar, like this is like rough, this could be backwards, but for every dollar that they like accrue, 16% of it is like net income after cost of expenses or stuff like that. Mine is 44 cents. So for every dollar that I get in, I get to keep 44 cents after my cost of sale. Now, this is a big thing to know because now the question is how much free cash do you have to like reinvest? So there's a lot of like stuff that makes your finances more complex. So that net income after cost of sale, can be like the beginning of your cash flow statement, but your free cash is like after other types of deductions too. And so I'm not going to get into the convolution of all of that, but the fact that I have 44 cents of liquidity for every dollar that comes in is pretty boss, right? And that's why I was able to invest into doubling my position. Like I had 50 something properties in like the final quarter of 2019, and we just bubbled up another 50 because we had the cash on hand to invest in furniture and all this stuff to like start these properties. So we added like 50 properties and pretty much doubled our size in 90 days. The reason why is because I have so much money on hand per dollar that I've earned. So now, because of this extra 50 properties, coming into 2020, we've got 100 properties, and we are on pace to make $3 million this year in cash, like, deposits, revenues, not cash flow, sorry guys, I was gonna say it again, or better. And so if we maintain a ballpark number, let's not even say 44%, but if we, like if 35%, 33% at the lowest, but at $3 million per year in revenues, if we keep 33 cents on the dollar, we are cash flowing $1 million, or netting $1 million on our three. And then if we had investments in other ways that we make money that's not based on sales, then we could add that to our cash flow. And who knows, maybe we'll have that one day. But we don't buy property, we don't invest in outside the market, we just 100% reinvest all of our money back into our business. Now, some of you guys might think that that's asinine and reckless. And if you think so, let me know. If you think that at $3 million a year in revenues, we should be diversifying, I'd actually like to hear your opinion on it. And we could talk about that over the course of 2020 because there's a lot to come. So what I want you to take away from this is understanding financial jargon can help you understand what the real meat of companies like finances and profitability are. You don't have to be good at it to succeed. Like obviously here I am sitting talking to you right now about a stupid jargon mistake that I've made for years because I didn't understand, because I've been a sales guy my whole life. And so I look at like revenues and cash is like the same, right? So you can build a business without knowing everything, but you will grow if you do a good job. You'll grow to the size that at one point somebody's going to tug on your sleeve and say, hey, Sean, you're doing it wrong, or that's not correct, right? And you'll realize that you need to hire people who are good at these things that you're not good at. And that's how businesses grow. Do an excellent job, prove something, build momentum, and then hire people and start your team. Hire somebody who's really good at accounting. Hire somebody that's really good at HR. Hire somebody that's really good at operations. Thankfully, I've got that HR and the operations people in my squad, and eventually I'll have somebody who's like good. Well, I do have an accountant, by the way. I do have, but they're not like an employee. It's a company that I use. So maybe that's why I'm not privy to everything like this. I don't need to know everything because I just kick my numbers to somebody else and say, hey, please, crystal ball, tell me what's going on inside of my bank account. You don't need to be all-knowing to be successful, is the point. Thank you all for your patience with me as I butcher financial terms over the last couple of years. I had no clue that I was telling you guys inaccurate things like jargon-wise. So hopefully I didn't damage any of you too much. I will make a commitment in 2020 to be more intentional with how I'm speaking, so that way all of you guys can get like the real thing. Because I don't want you going and Googling something based on something I said and then realize that that word, it does not mean what you think it means.
He didn't fall? Inconceivable. You keep using that word. I don't think it means what you think it means.
Thank you for watching Airbnb Automated, and I'll see you on the other side.
Hi.